Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Jeffrey Tucker, the founder and president of the Brownstone Institute and the author of The Market Loves You, Why You Should Love It Back. Welcome back, my friend.
That's good to be here. Thank you.
Yeah, always a pleasure. I wanted to get you on to talk about everything that's happening in the economy, the craziness, gold, silver. First, let's start off with the numbers. You know, the Federal Reserve in Canada is lowering interest rates. The US still holding strong. When do you think that will change?
Break at some point. I'm not sure when that is. I was doing some history of the Weimar inflation and saw that the stock market, German stock market in 1921 was up 50% at the
Yeah.
beginning of the roaring inflation. So the inflation ultimately will land in financials, and how long it lasts and how high it goes is subject to time and place. There's no question that we're not seeing buying take place because of real value creation. It's more like money shopping for a home.
Yeah.
Sometimes it lands in goods and services and housing prices and other places, and sometimes it just lands in financials. And so I think that's probably where we are. I was most intrigued about the response of the markets to the GDP report.
Why?
The GDP report looked kind of vaguely impressive.
Right.
Um, And so I was curious about, what would the market response be to it? And it was interesting because, good news is bad news as far as Wall Street's concerned because it means the Fed is not going to lower rates, which is their heroin, right? They want lower
Right.
rates because they want loose credit, which is a disgrace. Like to any capitalist, it should be deeply embarrassing. The Wall Street's addicted to endless free money, right?
Right.
But that's where we are. So good news is bad news, and then bad news is good news to Wall Street under present conditions. But that GDP report was interesting because on one hand it seemed to be good news, which seems like bad news. On the other hand, it's fake.
Yeah.
And everybody knows that now. I mean, we're living in very strange times because you don't get the major financial press admitting that the data is fake, but anybody who's an actual skin of the game trader knows not to believe anything you hear from the Commerce Department or the Bureau of Labor Statistics.
Right.
And this GDP report was just another example of absurdity. Nobody believes that the Commerce Department knows exactly what's going on, but the big problem is the inflation adjustments because GDP data is typically reported in real terms, not nominal terms, which means they need some kind of deflator for GDP, which is interesting because nothing else is reported in real terms, like retail sales or wholesale factory orders or anything else.
Right.
But
Right.
GDP is by tradition reported in real terms, so they need a deflator. What they choose is what's called personal consumption expenditures, or PCE, which is itself derived from GDP, national income statistics, and is dramatically lower than the CPI.
Why is that? Why
And
is that?
well, just empirically, it's just true. I mean,
Right.
like I think CPA, the quarterly uh, CPI is up 2.8%, they say, um,
Right.
whereas the PCE is up 2.3%. So even if you just take existing GDP figures and adjust them by the CPI, it wipes out all the gains. So it
Wow.
just goes flat. All right. But nobody believes CPI figures. So the PCE is ridiculous. CPI is ridiculous, and it's ridiculous for very precise reasons.
Are you looking for the best place to invest in physical silver and gold? Support your stack and American small business by shopping with www.bullionbrother.com. Let them help you break away from the financial system and become your own bank. Gain financial independence and protect yourself from reckless government spending by stacking physical gold and silver. Check out the link in the description for the best deals online. At Bullion Brother, their mission statement is to distribute more ounces of precious metals into the hands of more everyday people. They are a new family-owned and operated bullion business established in 2020. Unlike the big box bullion retailers, they are a company of stackers designed for stackers. Use the coupon code SILVERAPE24 for $5 off your first purchase of $99 or more. That's BULLION brother.com. Thank you so much, everyone.
Um, Instead of house prices, uh, the CPI includes what's called homeowners equivalent rent, which is some fancy pants machinery that tries to estimate. I mean, we have actual house prices. Like, why don't we just use them, right? We
Right.
have a housing index. So just a few more minutes ago on X, I posted a comparison of the housing index
Uh-huh.
relative to homeowners equivalent rent. And one is soaring and the other is like relatively flat. So what are we doing here? But so
Uh,
which one does the CPI include? Just homeowners equivalent rent, not to mention excluding interest rates and homeowners insurance. And they have this wackadoodle way of calculating the increase in health
which is
insurance.
which is insane.
Yeah, well, in other words, all the things that are going up are
Are not
not in the
included.
in the CPI. So you got to figure that the PCE is lower than the CPI,
Right.
and the GDP is adjusted for the PCE. You know, at this point, you're looking at a level of fakery that is just unthinkable. And
Imagine, Jeffrey, what the real numbers are for
well, we
inflation.
don't know, and
Yeah, exactly.
we've commissioned a study to find out, and I think we're gonna find out. Like we have back of the envelope calculations on this stuff, but not anything really rigorous yet. But I've tasked the best empirical economists I know to
Nice.
revise all these numbers, and we're going to come out with a report in October. I want to mention one other thing here in this
Right, right.
context that people need to understand. Um, and it relates to the contribution of government
Hmm.
to the GDP. So for something like a generation after World War II, people thought World War II ended the Great Depression, based on the fact that that the GDP numbers were way up from 1942 to 1948, and uh, sorry, the dog.
It's
I don't
okay.
know. Every time I get on the Zoom, he just starts complaining. So and then it took about 20 years before people began to look at it and said, wait a minute, the GDP didn't go up during World War II. It was only a statistical illusion.
Mm,
Um, as far as we can tell, uh, people were on rationing tickets. People were being drafted and were being slaughtered and killed. The austerity and deprivation was everywhere. There's no way that GDP was going up, and so the Great Depression ended in 1948 when the war ended, and that's when all the saved money from the previous decade and a half came online, led to new investment, and we saw economic growth throughout the 1950s and 60s, but only after the war ended. Okay, that is now conventional wisdom.
wow.
Well, if you look at a chart, uh, which I've also posted, of government debt as a percentage of GDP
Uh-huh.
from 1940 to the present, it looks like a giant U shape. Okay, so it was extremely high
Hmm.
from during war. It went down and down and down. It was down for a very long time, and then went gradually up after 9/11, then after 2008, and then just went parabolic and rose through the roof, and starting from 2020 onwards. So at this point, we are now at 1946 levels of government debt relative to
That's
GDP, meaning
insane.
yeah, higher than 1946. So we have lived in the last 4 years to the equivalent, the fiscal equivalent of World War II in relative
Wow.
terms. Okay, so it's really important to remember. So what does that do to the accuracy of data? I mean, we
Hmm.
know that the prosperity of World War II is fake. It
Right.
was just a statistical illusion. What do we know about the last 4 years in light of that? Right? I would rather not wait 20 years
To figure
and
out
look
what the
and look
yeah.
back and go, oh, can you believe they thought they were prosperous? They clearly weren't.
Right,
They
right,
were
right.
dying.
Yeah, yeah.
Uh,
Oh,
so
that's
so
so interesting.
yeah, it is interesting, right? I'd rather not wait 20 or 30 years to look back and have
Right,
fancy historians at Harvard go, well, I think this is kind of I'd rather do that now and
right.
understand that the last 4 years is a bunch of fakery. Um, and just again, back of the envelope calculations that I've just done on the phone, and just kind of, because we don't actually know what the inflation numbers are. I'll
No.
tell you this much: they are not 18% over 4 years. There is no way that's true.
Why?
So and every person listening now knows this. I mean, like you can just look at grocery prices and see they're up at least 34%.
Oh, for
You know,
sure. In the
and
past
housing,
4 years,
I mean,
absolutely.
I don't know what they are, but 50%, 100%. I've seen houses in my own neighborhood that are 170% inflated over 4 years ago. Okay.
Yeah.
So, like, and the indexes, I can't tell you what they are, but they're very, very high, like 50, 60%. Car prices, any individual price you look at
Yeah.
is above 30% and as high as 100% or 150% or 200%. All right. So you can't have every individual sector uh being sky high and then the whole being 18%, right? That
Yeah, it
doesn't
doesn't
make any
make
sense.
sense. Yeah.
So if you adjust the GDP, to find real GDP output, uh, by doing two things. One is excluding the contribution of government to GDP, which always makes it look like it's higher than it really is, and then putting it in real terms according to an accurate, not PC, but an accurate rendering of the real price indexes over the last 4 years. What does that do to GDP? It seems as if, just again, just estimate, that we're down 18% over 4 years in real terms.
Wow. Which is insane. Like it doesn't make any sense.
It doesn't make any sense. But here's the thing. Um, this, for the first time in my life, the fakeness of the data is well known
Right.
among traders, among economists, among, anybody with skin in the
Even
game.
me, I'm not an economist or anything, just
Yeah.
silver and gold, and we all know the data is fake. There's no way it could just
Yeah.
be four, five,
Yeah.
six,
So
seven
people are
percent.
not taking it seriously. So that's a long-winded way of saying when the data came out yesterday going, oh, GDP, it's unexpected growth, whatever. People yawned and went, oh, ho hum. This is another phony baloney press release from the Department of Commerce. It's all politicized and made up. And
Right.
and people know it. And the only thing that people care about is not so much the accuracy of the data, but what is the perceptions of the accuracy of the data going to do to Federal Reserve policy? Like, are they going
Right,
to
right.
use this in order to cut rates,
Keep rates the
or
same.
yeah, or delay the cutting of rates further? That's all that matters. So we are living in an economic hologram. Uh, that's the most
We're living in the Federal Reserve's world, the
Yeah,
perception.
kind of. It's very strange. And maybe it's been this way for decades. I don't know,
Yeah.
but I'm just now seeing it, and the reality uh protrudes itself every once in a while when you look at very precise things that can't be hedonically adjusted, like factory orders. I more or less think those are accurate, and even adjusting those by the CPI alone, forgetting an accurate CPI, we are down dramatically from 4 years ago in factory orders in real terms.
See,
And same
and that would show you more truth than what numbers they're giving you because you can see the
for
orders were
sure. And
coming in.
and again, this is just using CPI, which is wildly underestimated by any standards. Even by,
Mhm.
there was a paper that came out from National Bureau of Economic Research that just included only interest rates as part of CPI, and it showed by 2023 inflation reaching 18% year over year.
Did you know
So
if in the Weimar, sorry to cut you off, do you know in the
yeah.
Weimar, were they faking data too, government data, faking
No,
inflation?
no.
No?
Well, they weren't collecting it very well. So a lot of what we know about what happened in the Weimar period is retrospective. I mean, there's economists in Italy and elsewhere were very curious and wrote big books, like 5 and 10 years later about precisely what happened. I just read one
Right.
recently. And it's fascinating because in the first, I'm so interested in what happened in 19, because we know by 1923, the currency was completely dead and the entire society was in total chaos. But
Right.
1921 was an interesting year because stock markets, as I mentioned to you, were up 50%. Everybody who wanted a job could get a job. You couldn't stop
This is
making
in
money.
1921.
Yeah, 1921. You were
And then
working
by 93 and 94 the Weimar was done.
by 23, the currency was completely dead, right? So
And then
20,
20, well, that's insane.
yeah, yeah. So just in a very quick period, over 2.5 years, we went from economic boom. It felt like an economic boom because everybody seemed to be making money. Money making opportunities were everywhere, and people were scrambling, working 2 or 3 jobs, day trading,
That's in the
everything.
Weimar. That's in the Weimar.
Yeah, in Weimar, right.
Sure.
And day trading, and it was like economic activity was going crazy. And then the inflation started, and then it went to, whatever, 100,000%, wiped out the
Wow.
currency. And at that point, anything that you could carry your currency in was more valuable than what you were carrying. So
Right.
people would,
Wheelbarrow.
yeah, the famous case of the wheelbarrow, people would steal your wheelbarrow and leave them. And then, but by the winter of 23, everybody's using the currency to fuel their homes for heat. So,
You know
uh,
what's scary? That could happen to the US. You know, the
look,
stock
it could
market's
happen.
up.
And
Yeah.
it's not out of the question, really. We
Right.
don't really know what the impact is over the long term of having created $6 trillion in new money over the course of the better part 18 months. We don't know what that looks like. We're all observers to this right now,
Right.
and we also don't know the impact of what happens if. So a lot of the dollar has benefited enormously by being the international reserve currency. So we create the debt, other central banks buy the debt. They use that debt as an asset,
Right.
on which to build their production structures, to build consumer goods, to sell back to Americans. And we go like, cheap goods. This is great. This is great. Um, we're and then that hollows out the industrial base, and now nobody can make anything in this country. We don't make
Right.
anything anymore,
No.
except Zoom meetings. We make those. Uh, right.
Uh,
Uh, and so what happens when U.S. federal debt stops being an asset, and that
right.
will stop at some point, and
Yeah,
we
because
don't
it's
know the.
like you can't force countries forever to use the US dollar. You can't keep the US petrodollar going forever. Okay, you know.
Uh, yeah, at some point it's going to come to an end. I don't know when that is. We'll look at the progress of BRICS, but if that ever happens, then everything's going to just dramatically change. I think in some ways for the better. I mean, there's part of me doesn't regret these times because we're seeing this painful, this gradual day by day
Like you don't know what's gonna
assertion,
happen.
yeah, assertion of the real world over
Right.
this fake world that's been created.
Right.
And it's going to happen. It's just it's painful to watch,
Yeah,
but
yeah.
I
You're
think the
living
end
in it.
result, yeah, you're living in it, and I think it's going to be in the end sort of good, but we're talking about the long term. I really feel bad for the new administration, whoever it is, whatever it is,
Oh
whether
yeah.
it's
Or even the youth, the kids coming up in the next 10,
oh
20, 30 years with inflation and it's over for them.
yeah, the entire professional workforce is in grave trouble because nobody knows how to work, what to do. They don't know what work is
Right,
anymore.
right.
All of life consists of faking it, on and meetings and
Social media and this and that and fake
yeah.
wealth and fake data and
Yeah. But it's very interesting though, because I would say that for the first time in 4 years, there's tremendous industry-wide incredulity towards the data. Now, you say it that way, and it sounds like, oh, okay, that's no big deal. Nobody believes the data. Well, okay, but the only way we understand the world is through data, right? I
right.
mean, like, two
Through
days ago,
numbers, yeah.
yeah, I counted 3 articles on the front page of the Wall Street Journal that fundamentally depended on the accuracy of jobs data, inflation data, and GDP data. Okay.
Right.
Like every journalist riffs off the existing data.
Yeah.
If all the data is fake, what do you have to write about?
Like, what if they came out tomorrow, all the news corporations and journalists, and say, actually, the inflation is 20% and this is the actual GDP? The people will go crazy. The stock market will go crazy.
Yeah, and people whisper about it in private. I've been writing about it on Brownstone. Really, like Peter St. Onge and I co-authored an article that was revising all this data and raising fundamental questions about everything. And we pushed it out there, and I kept waiting for some, mainstream data monger, numbers crunching, econometrician or whatever to refute us or write us and say, "Oh, you're full of shit. This is not true."
Right.
Um, but it never happened. And I called Peter up and I said, "Do you find it strange? We wrote this weird article saying everything is fake and grappling with the realities of
People
that.
just know it at this point. They just don't know how to come to terms with it,
They
probably.
don't want to say.
Yeah,
They
yeah,
don't, and it reminds me very much of the COVID period where the World Health Organization was saying, there's a deadly disease and everybody's going to die. And
yeah. I was first thing I was thinking about when that happened in 2020, 2021. I was like, I was just looking on the streets. I was like, where are the bodies? Like if I don't see any
the
bodies,
hospitals are empty,
yeah.
right? And I'm sorry that you've got sniffles for a few days or whatever. But yeah, and so we gradually realized that it was all fake, and I didn't know that at the time. I was watching. I For some reason, like we
Me
all just
neither. And
need
when
to.
it first came out, it
Yeah,
was kind of like hypnosis.
it was. And I remember I would go to the site Our World in Data, which turns out to be FTX funded, by the way. But anyway, I would like they had charts of, oh, here's what's going on. Here's the disease in Arizona. Oh, here's what's going on in Vermont. Here's what's happening in Colorado. And I would click and look on the states and say, oh, here comes the virus. Oh, it's going away. Oh, now it's coming. And for some reason, I believed that these things were real.
Yeah,
It
yeah,
never
for
occurred
sure.
to me that it's all contingent upon testing, the accuracy of testing, the reporting, the level of severity. The presence of a virus does not mean you're sick.
Yeah.
What are most people doing? Are you lining up in multitudes to
Yeah.
to get your
There's
PCR
there was
exams?
a guy too in Europe. I think it was in Germany. He took 73 booster shots, got COVID.
Right. So
Uh,
and I'm so embarrassed. And I look back when because I was a skeptic of the lockdowns. Obviously, I wrote against it all. I was against lockdowns,
Yeah,
but I
me too.
believed the data reporting. It never occurred to me that it was just all sort of made up,
Yeah.
because it was
I
presented.
believe the data reporting like the first like month or two, and then it like got on to month three, and I was like, why am I not seeing any bodies on the street? None of my friends or family are going. Oh, like something's up here.
Yeah, then you have the problems just began there, right? Because then you have the cause of death problem, right? So we had massive government subsidies that would reward hospitals that were bankrupt because they got rid of, elective surgeries. They're clamoring for money. So now suddenly everybody who died, died from COVID. Doesn't matter.
Yeah.
You were desperately ill, you're 113 years old, you were in a motorcycle accident.
You got
Everybody was dying
bronchitis,
from
everything.
everybody was suddenly dead from COVID. So, and so as time went on, I got ever more doubtful about this stuff. And in some ways, I'm glad for that period because it made me skeptical of all this sort of fake science that
Yeah,
is
yeah.
being
The
pushed out.
data,
Yeah,
inflation,
it
everything.
never occurred to me it would impact on basic economic data like inflation, GDP, jobs, retail sales, wholesale sales, all the things we kind of look at and we have always trusted. And then you just look at it more carefully and you realize, wait, this can't be true. So it was also during that period we started seeing the fakeries become more obvious. And the most telling point is the difference between the establishment and household surveys on jobs, which
Right.
used to be the same, and then they diverged in 2020, and they keep diverging. They're getting wider and wider. So, and so wide that like one is declining and the other is increasing, right? So you don't know, based on two different surveys, and the reason you just look at it, you realize, okay, the establishment survey is double and triple counting the same people and calling them new jobs.
Right.
The household survey does not do that. I'm
Yeah,
not saying
it's a
either is
crazy
accurate, but
it's
it's
crazy.
the fakery is out there, and that's sort of what we're doing now is just trying to ferret out.
Yeah, no,
Uh,
it's a really crazy world, and especially with everything that's happening, like you could really, really feel it. But Jeffrey, I wanted to thank you so much for coming down to Wall Street Silver. It's always a huge, huge pleasure having you come down. What a great conversation we had, and hopefully in the future, I'd love to have you back on as the market develops.
okay, thanks so much.
Talk to you soon.